For over 10 years, retail traders have been looking for ways to trade and make money using smart money concepts. Earlier this year, ICT launched their 2022 mentorship program, and the philosophy of trading like the banks has only gained enormous popularity since then. In this video, we will explore a simple but highly effective trading strategy that's deeply rooted in the philosophy of smart money concepts. Later in the video, we will also backtest this particular strategy 150 times using a risk-to-reward ratio of 1:2 on the 1-minute time frame. The backtesting software I'm gonna be using is called TraderEdge. I'll leave a link in the description. Let's get into it. Now, as you may already know, TradingView doesn't give you a lot of chart data on the 1-minute time frame. So now the question is, how exactly am I gonna find these 150 trades for backtesting when the 1-minute time frame has only 2 weeks of data? Well, if you stick to the end of the video, I'm gonna show you a cool trick that you can use to get up to 3 times more data on the 1-minute time frame on your TradingView.
It's free real estate.
This trick actually works on any time frame, not just the 1-minute time frame. So be sure to stick to the end for exactly that. Now, for this backtesting, I'm gonna be using the EURUSD on the 1-minute time frame, but you can do this strategy on any security that you like to trade. Head over to the indicator search tab and type in Smart Money Concepts. Be sure to select this one by Lux Algo. Then we're gonna access this indicator settings to make some changes. To do that, click right here. And on the Inputs tab, uncheck the following options exactly like I'm doing right now. The Lux Algo Smart Money Concepts Indicator is a highly accurate tool designed to provide real-time analysis of market structure and activity. It includes a range of features relevant to SMC, such as break of structure labeled as BOS, change of character labeled as chalk, bullish and bearish order blocks, equal highs and equal lows, fair value gap detection, previous highs and lows, etc. We're obviously not going to be using all of these indicators features, just 2 of them. That is, change of character and break of structure. To take a long trade, we're going to wait for a bullish change of character to form, followed by a bullish break of structure, and then we're going to enter the trade on this candle right here. Now, you may be wondering, how do I know it's a bullish change of character or a bullish break of structure? Well, when both the dotted line and the text are green, that is a bullish market structure label, like this one right here. You see, the text and the dotted line are all green. But when the line and the text are red, like here, that becomes a bearish market structure label. Speaking of bearish, how do we take a short trade? Well, we're gonna take a short trade when there is a bearish change of character labeled as chalk, followed by a bearish break of structure labeled as BOS, like right here. Now, for the second indicator, head back to the indicator search tab and type in market bias. Be sure to select this one by Professor X. Again, we're gonna access this indicator settings by clicking right here, and on the Inputs tab, change the period to 60, and then change the smoothing to 10. After that, head over to the Style tab and uncheck this option right here. Then here on the plot's background, click on each color and change the opacity to 30. After that, click OK. Now this indicator will be our trend identifier. When it's green, we only take long trades. When it's red, we only take short trades. Now let's go over the conditions for entering trades. To enter a long trade, first, the Smart Money Concepts indicator should print a bullish change of character in a downtrend, followed by a bullish break of structure in an uptrend. What I mean by this is that this chalk label, this one right here, should be within the red zone of the market bias indicator, while the BOS label, this one right here, should be within the green zone of the market bias indicator. Second, there actually isn't any other condition. It's just that one condition we've already talked about. That's how simple this strategy is. All entry conditions are met on this candle, so we're gonna enter a long trade. The stop loss is gonna be set below the most recent swing low, which is this one right here. And for the take profit, we're gonna set it at 2 times the risk. We let this trade run and full TP. Now, here's another example. As we can see here, chalk label in the red zone, BOS label in the green zone. So, we enter a long trade here. Set our stop loss below the most recent swing low, which is this one right here. And for the take profit, we're gonna set it at 2 times the risk. We let this trade run and full TP. Here's one more example. Chalk label in the red zone, BOS label in the green zone. We enter a long trade here. Set our stop loss below the most recent swing low, which is this one right here. And for the take profit, we're gonna set it at 2 times the risk. We let the trade run and full TP. Now, I know sometimes simple can be complicated. Now, what you want to remember is that for a long trade, the chalk label should be within the red zone and the BOS label should be within the green zone. I repeat, chalk label in the red zone, BOS label in the green zone. Now, you may be asking yourself, but what are the conditions for entering a short trade? Well, we're gonna do the opposite of everything we did for a long trade. First, the Smart Money Concepts indicator should print a bearish change of character in a bullish trend, followed by a bearish break of structure in a downtrend. Again, what I mean by this is that this chalk label, this one right here, should be within the green zone of the market bias indicator, while the BOS label, this one right here, should be within the red zone of the market bias indicator. Second, oh, I forgot, no other conditions, just the one. Our entry condition is met on this candle, so we enter a short trade. We're gonna set our stop loss above the most recent swing high, which is this one right here. And for the take profit, we're gonna set it at 2 times the risk. We let the trade run and full TP. Now, here's another example. As we can see here, chalk label in the green zone, BOS label in the red zone. So, we enter a short trade here. Set our stop loss above the most recent swing high, which is this one right here. And for the take profit, we're gonna set it at 2 times the risk. We let this trade run and full TP. Here's one more example. Chalk label in the green zone, BOS label in the red zone. We enter a short trade here. Set our stop loss above the most recent swing high, which is this one right here. And for the take profit, we're gonna set it at 2 times the risk. We let this trade run and full TP. Now, the most important question.
How exactly does this strategy perform in different market conditions?
Well, to answer that, I'm gonna do a backtest with 150 trades using a risk-to-reward ratio of 1 to 2. The account size is gonna be set at $1,000 and we're gonna be risking 2% of that every time we take a trade. Let's get into it. After 150 trades, we see that the win rate of this strategy was 61% and the gain on the account was 1,043%. These numbers are really good for a risk-to-reward ratio of 1 to 2. We see that it had an amazing profit factor of 3.17, 7 consecutive wins against 4 consecutive losses, and a maximum drawdown of 7.87%. Also, the backtesting for this strategy took 5 weeks. So the trick that I promised you in the beginning of the video, the one that you can do to get up to 3 times more data on your chart, works like this. First, you have to be on any of the paid TradingView plans. Then you wanna go to your time jump tool and jump as far back as possible. Basically, you wanna get to the end of the data that you've already been provided by TradingView. For me, I'm on the Pro plan, so I'm gonna jump as far back as possible, maybe to this date. Now, as you can see here, I'm at the very end of the data that I already have on my Pro plan. To access more data, you basically go and activate bar replay like this. And then you click on this last bar right here. And then boom, here you go. Now I have 2 more weeks of data right here if I scroll to the left. Now if you want more data, we do the exact same thing we did before. And it's gonna give us 2 more weeks of data. So we're gonna jump all the way back. And as you can see here, this is the last candle. So what we do is we again activate the bar replay on this very last candle right here. And just like before, there you go, more data. And the cool thing is, we can do it again. So we're gonna jump as far back as possible, again, to the very last bar. And right here again, we activate the bar replay on the last candle. And just like that, we have 3 times more data than before. Now, you may be asking yourself,
Can we jump as far back as possible? Maybe all the way to the beginning of time?
well, no. We can jump back in time only 3 times. Why only 3 times? I have no idea. Now, the 3 times jumps that we did have given me a total of 6 weeks of chart data. Add that to the 2 weeks of data I already have, and that's 2 months of data right there. So if you have, let's say, a 1-minute strategy that you need to backtest on more than just 2 weeks of data on TradingView, then you're welcome. If you like this video, hit the like button below and consider subscribing to stay tuned. That's been it. Thanks for watching, and I'll see you guys next time.